Happy Thursday, everybody. Welcome back to another episode of Benzinga Live. Sorry about that. We're a couple minutes late. Quick rundown for the show for today. Here in a few minutes at noon, I'll be joined by Robert Roy, our good friend at tradingwithrob.com. We'll be talking about some options with him. We'll be looking at Tesla's options today. Tesla trading for the first day after its 3-for-1 stock split. Stock went down to about $300. I'm going to go ahead and get that chart pulled up. That's the one I've been watching most today. Apple as well. SoFi's CEO was just on CNBC, so we'll take a look at SoFi stock as well. I realized yesterday, if you guys were watching the show yesterday, I teased a new stock that I am adding to my portfolio, a new stock I'm bullish on, and meant to talk about it yesterday, but was having such good conversations with Nick and our guests that we did not get to that stock pick. So I'll make sure we, or at least I'll try to get to that today. If someone in the chat keeps me honest and reminds me, make sure we do get to that stock pick today. Enver. Yeah, Enver, if you're out there and you want to hop on and co-host, for sure. All right, let's go over to Tesla real quick. Down a little bit more than 1%, down about $3, $293 right now. Of course, the 3-to-1 split taking course today, so the options chain affected as well. We will take a look at that later. Also, here in a minute or two, we are going to play an interview that we actually did here in the Benzinga office with a local YouTuber kid that is a really sharp kid, knows what he's doing. Josh Laurent. It was a pleasure to talk to him. So we've had this video now for a couple of weeks. Been trying to find a good time to play it, and I think today we have a few, 20 minutes before Rob Roy will join us. So I think it's a good time to play it. So we'll do that today. And Josh is big on YouTube. I mean, I think he's got more subs than we do. So good conversation there. Not really about stocks or finance, and I know that's probably why most of you guys are here. His YouTube is more about cars, but we're here in Detroit, and it's a local kid, so thought we'd give him some love and play the interview. But hope you guys stick around for that. And then again, Rob Roy, options trades, noon. After that, we'll go over to my stock pick. We may be joined by Luke Jacoby. I'm not sure exactly where he's at right now. He usually hops on Thursdays, though, so maybe we'll get him on. And if he does, that means we'll get Raz and Luke on this week, which I don't know the last time we've had that in a week is. All right, guys, go ahead and smash the like, subscribe to the channel if you have not already. We're going to go ahead and play that intro and then get over to that interview with my man, Josh Laurent.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. All right, so while we get that video ready, I'll go ahead and pull my Benzinga Pro back up. So again, Tesla stock trading down a little bit today. Let's go over to the overall indices. Q's up about 0.75%, and a little bit more than that actually. So kind of rare to see Tesla trading down on a day where the Q's are up. So we'll see if Tesla makes up some of those gains. All right, I'm getting word the video's ready. Let's go ahead and get into that. All right, how's everyone doing? Benzinga producer and co-host Aaron Bree here. I'm welcoming Josh Laurent. Say that right?
Josh Laurent.
Josh
Same
Laurent.
thing, no. Everybody
Josh
says that.
Laurent to the Benzinga office today. Josh, how you enjoying the office?
Man, I love it. It's actually really nice in here. Like, it's really, like, broomy type beat, It's like, I don't know how to say it. Like, at home type of office.
Well, that's
I
how
like
we want to make
go.
you feel at home,
There
Josh.
we go.
So let's hop straight into it. You're from Detroit area originally?
Yep.
Nice, so not
From
too
around
far
here.
from the office here?
No, probably about 30 minutes, not too far.
All right. And you're a young kid. You're a young guy. How old are you?
21.
21. All right. So you're pretty big on YouTube. I got your channel pulled up here. 300,000 subscribers. You want to talk about the channel and kind of how you got this started, what the channel's about, what you do?
So I started YouTube in high school, so about when I was 17, and I started because like I would post my life on Snapchat and my views would double, and I was funny, and so now I was like, I might as well just start YouTube, and I started vlogging, and ever since then. And then when I turned 18, I got a Charger Scat Pack, and I took that to high school, and that's like my biggest video.
Okay.
So because I always loved cars, so then when I got my Scat Pack, I just like vlogged around cars and grew from there.
I was gonna say we're both in Detroit. We know what a Charger Scat Pack. Some people out there might not know.
They might not know. They might be like a Charger, so you got to say both words together, so then they know.
Okay.
You can't just say one, you know.
So I think that's interesting. You're talking about how you went from kind of Snapchat to YouTube. So you didn't have like visions of being an influencer. You just were doing your own social media thing. Saw people that liked it, and then decided to do it on YouTube as well.
Yeah, it was just like I knew I wanted to be like great in something, and then it was just like I could do YouTube. If people like this, I could do YouTube, and just started it.
Yeah,
literally just that.
So I mean, there's like a million people out there on YouTube making videos trying to get subscribers. Was it hard at the beginning gaining any traction, or was it something like you were posting and right away growing in popularity?
I've been doing it for 5 years. I didn't get any like traction or anything for like 2.5 years.
Oh wow.
Yeah, so it was hard in the beginning, but like the number one thing is just staying consistent and stuff, and it happens.
So you've got the YouTube channel. It's basically all about cars. 300,000 subscribers. You're from Detroit, Motor City. When did you kind of first get interested in cars, or know that this is something that you're passionate about?
Ever since I was a kid. So my dad, he had a Corvette and stuff, and I would always tell him to go fast, and he would hit the gas. So it was one time he was dropping me off somewhere, wherever my mom was, and I told him to go fast. I would literally just be like, go fast, and then he would do it, but then he got pulled over.
Okay.
And I was about like 4 years old when it happened. And so then, you know, the Corvette was so low, I had the seatbelt like behind me because I couldn't like see over the dash. Fun times. But like ever since then, I always loved cars. Like my family, they would drag race at Milan Dragway. So it'd be like they would be there till like 4 a.m. I would fall asleep there and randomly wake up at my cousin's house.
Okay.
Crazy stuff like that.
One of those when you're a kid and you wake up like,
yeah,
in the bed when you fell asleep in the car.
Yeah, literally like one of those. Every time though, it happened every time.
Yeah. I have your YouTube pulled up right here. I see a video about you getting pulled over.
Oh yeah, no, that was lit. That pullover is lit.
Is that like a common occurrence? You getting pulled over a lot?
I haven't been pulled over in like a long time since then.
Okay.
But that was like, it was part of it. You know, I think that was part of it.
Yeah. And so, you know, let's talk about exactly what you're doing with the cars you're getting, you know, kind of like what you're, you know, are you souping them up? Are you fixing the engines? What are you doing?
So basically with the cars I get, I'll get a car, and then my thing is to customize it. So I work with a bunch of other companies and stuff and get like body kits for it, or like tunes or engine mods and everything, and just make it one of one. That's my thing, is to get a car, make it one of one, and have fun with it. So I like shooting flames and all of that stuff, and just having cars people never seen before. I like my cars are supposed to, when people see it, be like, what the heck? I never seen that before. And I tell them, I know, me either, type beat, you know, so.
Yeah, and so correct me if I'm wrong here, Josh, but it seems like, and like I mentioned, we're in Detroit. People are into cars up here. Some people are into, like, you know, getting their cars super high performance and stuff. It seems like you're more into the design and aesthetic nature of the car. Is that correct?
Yeah, that's correct. I don't really care about speed too much. Of course, the car's always going to be fast, but like, as long as it's sweet. Honestly, that's me. I'm more about.
So you're making the car. You're trying to make the cars look good.
Yeah, look good and sound good too.
And it seems like even outside of cars, like you have good style. You come in here looking fresh.
I'm trying. You know, I'm trying to get my drip up a little bit.
Okay.
You know, I've been getting a little better.
What's some like advice you'd give someone like me? Like I'm trying to go out shopping somewhere and get some new clothes. Like where should I go? What should I look for?
So make sure you go to H&M in the men's section. You can go to Forever 21 in the men's section.
Okay,
and
I didn't know they had that.
No, literally, remember, you got to know this. You don't have to have designer stuff to have drip.
All right.
You don't have to design. Just because it's expensive don't mean it look good.
You
can get like basic stuff and you'll be good.
I like that. And you guys can't see his shoes right now, but he's got cool shoes on.
Little something.
Just a little
Just
something.
a little bit.
All right, Josh. So what I think is really cool about your story and what you're doing right now is you took something that you were obviously truly passionate about, cars, since you were a kid, decided to make this something that you were going to do full time, your YouTube channel. What kind of advice, or what would you tell someone maybe younger than you? How can they try to turn something that they're passionate about into something they can maybe make money off of, you know, or make a career out of?
So anything that you're passionate about, if you're truly like passionate and want to do it for life, it's it can be pretty simple. So let's say somebody likes shoes or anything, and they're like obsessed with like collecting shoes. You know, there's always like shoe resellers or people. You can basically sell shoes for a living. You like art, you could draw stuff and then sell paintings. So it's literally anything you could do to make a hobby out of it. Just like me, I loved cars my whole life. And then what I decided to do was monetize the number one thing I love, which there are ways now, thank you to the internet and everything. You could post on YouTube or Instagram, be an influencer on anything. It's literally so much that you could do now to make money is just crazy. So anything you want to do, you could do it. You just gotta figure it out and find a way. And it might be through social media nowadays.
Yeah, I love that. And so like you mentioned though, like you gave the example of someone that might be really into shoes. And for you it was cars. But when you started your YouTube channel, 4 years ago, there were already thousands of people posting videos about cars on there. Was that intimidating to you to see other creators already out there, or were you just like, hey man, I'm just gonna dive in and start doing this?
Mm-hmm. No, it wasn't too intimidating because I knew I knew how I was. I knew I was funny, and I knew people would enjoy watching me for me instead of just like cars or anything else. Like my number one thing is to connect with people personally before the cars. Like the cars is just like we all like cars and we show that, but at the end of the day, I call my subscribers Saint Squad. We connect with each other on the personal level and all of that.
Yeah, and I just imagine, like with that shoe example you gave, there are people out there that love shoes and would maybe want to do something with a shoe YouTube or website or something where they think, oh, there are already so many people out there doing that. I'm not going to do that. I wouldn't have any luck. But I love that with how you're saying basically the cars are just there basically in your YouTube videos. People are staying because of you, because of your personality.
Exactly. And that's what it is. So don't get discouraged from seeing a whole bunch of other people doing it, because those people aren't you at the end of the day.
It's beautiful.
You like that?
I did like that a lot. We're going to clip that one for sure. Make note of that, producer. And then, shoot, that was so beautiful. You made me forget what I was going to say. No, and I think too, I mean, it's the same way with like people that are streaming video games and stuff. It's like people go back to those streamers, the streamers will switch games. They'll go from Fortnite to Call of Duty to Apex, whatever, but the people are still watching them because they're watching them for the person and not the game itself.
Exactly, for the personality and just not the game. Of course you'll get like new people coming in just to see the game, or they're interested in it, then they'll probably watch just to see that. But then if they like your personality, they get addicted and keep watching more videos, and that's how you bring in more subscribers.
Beautiful. All right, Josh, well, I am going to, we're just gonna be fully transparent here. I think your story's cool. Mm-hmm. Everything's cool. But the real reason we brought you here is because you got 300,000 subscribers. We here at Benzinga got like 150. What are we doing wrong? You got to help us now. You're our new social media consultant. What are we doing wrong? What would you tell someone out there who's starting a YouTube channel? What are your first tips for growth?
First tips for growth is, one thing I always say is life is more simple than it seems. So there's not really any like cheat codes or anything to get it, but all it takes is honestly consistency. Like the number one thing. So the three things I say is consistency, discipline, and patience.
Okay.
Because it'll happen when it's the right time for you. That's what I say. So just if you stay consistent and you keep going, and it'll happen. Don't worry. Even though if it does get hard and all of that stuff and you think it's not going to work, you just got to stay consistent, and it can just happen randomly and it starts going.
So you're telling me if I go start a YouTube channel right now and I'm consistent and disciplined, I'm putting out a video every single day, I do it for 30 years and it's still not blown up, are you still going to tell me my time's coming?
Yeah, then you're doing something wrong right there. You probably got to change up what you're doing, got to change up the content or something.
So don't be that patient.
Yeah, don't be that patient. It'll probably take about, the max I'll give is 5 years. And
then start doing something different. If you're still not seeing growth, then.
If you're not seeing growth, you got to switch it up or something. It's okay to be able to have to survive for 5 years, maybe even 10 years, but you go on 30 years and you don't see nothing happening. You gotta brainstorm, think something's not right, and you got to change what's not right.
And then how about outside of YouTube? Have you ventured into, TikTok, Instagram, anything like that? Or do you focus mainly on YouTube?
So I do YouTube. I do have Instagram too. My Instagram is pretty nice. I'm at 90,000 followers on Instagram.
My God.
So I do a little bit of Instagram. I just started doing TikTok. TikTok really wasn't working for me like that because they kept taking my videos down. But now they stopped doing that. So
Because
I was just driving.
oh, you're not supposed to
Literally,
be driving
yeah.
and filming a TikTok.
Yeah.
Got it.
So I was driving. They took the video down.
Yeah.
But-
Well, that's so interesting because right now in 2022, everyone's kind of focusing on TikTok, and that's
Yep.
where a lot of the growth is. And you're kind of like old school, just doing the YouTube way.
Yeah, dude. It'd be like that.
Yeah. I mean, I'm sure as you get bigger, you'll have fans and stuff start posting clips of you on TikTok on their own and stuff. So you'll start getting exposure there, regardless of if you're active on there or not. So what about, are there anything exciting? I mean, I know you're mostly into sports cars and stuff. Is there anything exciting in the automotive industry, EVs or anything like happening that you think is pretty cool right now?
I like Tesla. So I like the Plaid, and I'm excited for I think it's called the Roadster. So it's like the two-door version of the Plaid, and it's supposed to be like 0 to 60 in 1.9 seconds.
Yeah, it wasn't street legal because it was too fast, so they had to go back into the
Really?
They had to start redesign. Yeah.
I did not know that.
Yeah.
Really?
Yeah, they said it was too
way.
fast to be street legal.
Dude.
But yeah, I think the Roadster was actually like one of the first cars Tesla put out.
Yeah.
And it's like been shelved for 10 years or so, and I'm trying to bring it back. But
Yep.
definitely, yeah. And I'm, of course, here in Detroit too, you've got Ford and whatnot making their new electric trucks. You've got Rivian. You've got some cool stuff happening in the car world right now.
Yeah. I don't know if I could do I will always need a gas car because I can't do no sound. Like if I'm in a fast car, I want to hear it too.
Yeah,
that's just me.
So do you think people that are like into sports cars will never fully adapt or accept the EVs?
I feel like by the time it's 2060, you'll see someone with like a 2022 Lamborghini in their garage still driving it.
All gas,
Yeah, all gas.
Well, but think about too. I mean, if like you said, the Tesla Plaid, if that starts beating all the other cars out there when you're racing, then people eventually will be like, "Oh shit, this thing's pretty good."
Yeah, it'll be people will be like, "No, this thing is fast. Skip all the other stuff." But I believe it'll be like some true car people. It's just like I can't get rid of a gas car.
Yeah, I mean, it's the same thing with like manuals versus automatic. People out there will be always want the manual. I know that there are some EV companies that are like trying to make it kind of artificially give you that sound.
Really?
Yeah, like they'll give you like a fake engine revving sound, so it still feels and sounds like you're driving a real car, but really it's all fake.
Yeah, I think the i8 did that. BMW i8, they had the fake sound.
Oh, did they have an electric version?
Yeah, so the i8 was a hybrid, and then they put like a fake sound, and it's a speaker by the exhaust, I heard.
Okay.
Yeah.
Yeah.
It's all right.
What about, what's your favorite, I mean, between like the wait, you said you said that was the i8?
Yeah.
Okay, so what about between we'll say the i8 or the Audi R8?
Oh, I love R8s. I always pick an R8. That's V10 right there.
All right.
Yeah. R8s are hard.
All right, what about a CTS-V versus GTR?
That's right. I do like GTRs because they shoot fat flames. But then the CTS-V is like, sounds good too. I think I have to go with GTR because you could do a crazy build on that, like Liberty Walk, flames, wing, all of that.
All right, there you have it. Josh, anything we didn't get to you want to chat about?
No, I think that's all. Well, one thing I can say for everyone who does want to like start anything like YouTube or anything, well, like I said before, just stay consistent, and no matter if it does get hard, just keep going because it always gets better. Because everything will always pass. The bad times will pass, and the good times will pass too. And you'll be all right. Trust me. Trust the process, and just keep going.
There you go. Alrighty, guys. So that was the interview with Josh Laurent. Hope you guys enjoyed that. I enjoyed talking to him. He's a great kid. Like I said, go follow his YouTube channel. We'll throw that link in the chat. But yeah, so we have about 10 minutes here until Rob Roy joins us. So let's take that time. I guess it kind of is a car show. We're in Detroit, so we gotta, do cars at some point. I was actually thinking about it. What if I started covering like the car companies that are in town? And then I tried to, go on like CNBC and talk about the latest news out Ford. Acted like I was the Ford expert. I could probably do that here in Detroit. So we've got about 7 minutes until Rob Roy. I'm thinking let's go through my stock pick. And again, so yesterday I teased a new stock pick that I have. I gave some background on it. I'll give some background on it again right now because, I'm curious if anyone guesses it in the chat. It's not really like a dark horse under the radar stock. It's one that's been talked about a lot over the last year or so. For whatever reason, I was kind of overlooking it. I kept seeing it in the headlines, and didn't really, I didn't understand the story, I don't think. And I read an article in the Wall Street Journal a couple days ago that really, I think, helped change my opinion on this stock. No, not Callaway Golf. I've been in that stock. It's just not that exciting. I don't really know what's going on with Callaway. I think long term golf is still going to grow a lot, and we've seen golf a lot in the headlines over the past few months with all the developments in the PGA and Live Tour, and we have the PGA finale. What's it called? Tour Championship starting right now, Eastlake. So 1 p.m. Here in about an hour or so. I think long term, Callaway will be a fine stock to own, but there are probably more interesting opportunities out there. Gas is for Neanderthals, old tech for old people. All right. So I'm not seeing any guesses in the chat outside of Shelly. So maybe I'll give some more hints. So all right. So I've mentioned this stock has been in the headlines a lot, mainly because it's there's been one investor buying a lot of it. That should be a big hint. That has been the main headline. Well, actually, there's another big headline of this stock, actually, that outside of one famous investor buying a lot of it. Chris Kachi in the chat. Shout out Chris, by the way. Chris celebrates his 2 years at Benzinga, I believe, yesterday. Callaway changing its name to include Topgolf. All right, there we go. We've got some right answers in the chat, basically at the same exact time. Janine, David, Night for Humanity, and David Lynn all guessed it correctly. It is Oxy. So here's what so I'll walk you through the thought process. And yes, so the main headline, that Oxy has had over the past year has been that Warren Buffett's been buying a lot of it, right? The other big headline that I think I saw the other day, which I'm pretty sure it's still true, is that actually right now Oxy is the best performing S&P 5 stock this year. So you can turn around and say, oh my God, Aaron, like, cool, you've got a stock pick that Warren Buffett's been talking about for 6 months. It's the best performing stock of the year. And I know, that's what I'm saying. I'm not saying this is a dark horse, but I'm saying why now, even though it's already had such a great year, such a great run, really, since the COVID lows. So you look at Occidental Petroleum, we go down to the COVID lows, $9. It's up to 74 right now. So if you were buying Oxy down here at $9-10, you've been loving this. But basically, I thought, as Warren's buying this, it's like, okay, here's classic Warren buying some kind of old, more boring business that has a good balance sheet, that has good cash flow, especially in, energy. A oil and gas company is going to be a little bit safer in these turbulent times. Here's what I didn't really understand, I don't think, about Occidental Petroleum, and maybe what Warren has seen is that outside of it's A, making a lot of money, which Warren likes, good balance sheet, returning value to shareholders, but B, also focusing on long-term growth through sustainable practices, through carbon capture. And that's the part of the story that I didn't really understand. I never really saw Occidental Petroleum as a growth stock, and that was my fault as an investor, right? As a potential investor in this company, I saw it as an energy, oil and gas company, and Warren Buffett, this old, boring, guy that invests in mostly boring companies, outside of Apple, is buying a lot of it. So I just saw it as a value company, one that has good cash flow and no growth aspect. But I read this article from Wall Street Journal, and it talks a lot about, the future for Occidental Petroleum. And trust me, I mean, I'm kind of I'm not a pessimist in general. I'm actually the opposite. I'm an optimist, but I'm a lot of times pessimistic of, like, of course, an oil and gas company is going to market itself as, oh, we're, looking toward the future and wanting to be clean and clean energy. So I it's hard, it's not like, oh, this is, a clean energy play right now. I'm not saying that, but in terms of its carbon capture technology, which we'll have to get a carbon capture tech expert on to talk exactly about it. But yeah, so here, Wall Street Journal is talking about the company's focus on becoming a greener operator may inform Mr. Buffett's appetite. Analysts say Berkshire's energy unit, Berkshire Hathaway Energy, has stated a goal of retiring its coal units by 2049. So this is like in line with Warren Buffett's, if you want to call it ESG, whatever you want to call it, Warren Buffett's investing in clean energy practices. So Occidental intends to develop 70 plants to suck carbon dioxide out of the atmosphere by 2035. It told investors in March. It has said it would invest between $100 million and $300 million through its low carbon unit this year. Investment bank Truist Securities said in a June note that more than 10% of Occidental's total business could come from its carbon capture division in a couple of years. So here's the thing: is if they're the leader in carbon capture, and they can go to other companies and say, hey, we can help capture some of your carbon emissions, thus saving you this much money on taxes, or even making you net income through, carbon tax credits, that becomes this whole different revenue line that, I really think Warren is looking at down the road. Shelly saying you'd be buying ahead, and I know, and that's what I'm saying, is that where it's like, yeah, I'm pitching a stock that's been the S&P's best performing stock. It's at all-time highs, but there's a reason it's all at all-time highs, right? People are still buying it up here, and a lot of times you buy stock at all-time highs, you're buying in a strength, and they make new all-time highs. So if I'm looking at this as an investment, which I did add some to my Roth yesterday. If I'm looking at this an investment to hold long term, maybe, could I wait and try to buy it on a pullback and then, sure. But the way I see it is, if I'm going to hold this for 5+ years, why does it doesn't matter. I can buy it at $75, and if it draws down to 60, who cares? I'm going to hold it for 10 years and hope I can sell it for 500. Yeah, Shelly, there are a million stocks in the market. This is the one that I was looking into. Realized that I was judging a book by its cover. I was judging the stock based on what I perceived about it. It being an old trodgy, gas and oil company that isn't exciting. And then I looked at it and I was like, oh, wow, they actually are doing some cool kind of innovative tech things that could make a lot of money down the road. Yeah, I mean, Janine, that's a good option too. Buy. Oh, wow, you actually have you and Warren in your profile picture. Wow, nice, Janine. Congrats. That's an option too. Buying Berk B. I think. Yeah, 100%. I mean, buying Oxy though is a way to get exposure just to the company without getting exposure to all the other companies in Warren's portfolio. Although, here's the other thing about Oxy. So Warren Buffett currently holds about 20% of the company. He filed regulatory papers to buy up to 50% of it. I don't know about you, but I wouldn't go through the regulatory paperwork to do something unless I was going to do it. So if that's telling me that Warren Buffett might buy 30%, not probably, is going to buy 30% more of this company, that's bullish to me. And then to Janine's point, I mean, Buffett could eventually take this private. So yeah, it's interesting to me. Like I said, I mean, I'm honest. I'm not saying it's yeah, I mean, Jay Rice, Shelly, that's fair. Buying at the top. If you think it's topped out here, there's a easy way to make money off of it. You can short it. And again, I'm not saying it's not going to pull back, a few 10%, of course it can pull back here. I'm buying this as a long-term investment. All right, guys, let's get to Rob Roy. I see him hanging out in the background. Rob with tradinglikeaboss.com. I'll go ahead and drop that link in the chat. Excited to get Rob back on the show. So without further ado, let's go ahead and give Rob our special intro. Bring him on the show. Mr. Roy, how you doing today?
Aaron, I'm great. How about yourself?
Pretty good. Just, you know, it's a good Thursday so far. The markets seem to be doing well. The Q's giving up some of their gains, but hanging out. Been trading a little bit. How about you?
Doing good. Busy last couple of days, couple of birthdays, engagement party, all kinds of fun this last week over a 4-day span, 2 birthdays and an engagement party. So, yeah. Whew. But market's been okay today. We had one, we got a little smacked on NVIDIA, but other than that, we did okay. Not too bad today.
Yeah. So what's been, I mean, obviously this week, it seems like everyone's been focused on this Jackson Hole event that's starting tomorrow. You know, are you anticipating some increased volatility heading into that? What are you watching?
I don't know if it's going to give us as much volatility as some think it will. The opportunity is there, but unless we hear some crazy stuff out of it, I think we've had such a run already. And if you look just where we're sitting now on the S&P, and just pull it up here. If you look at where we're at on the S&P right now, the volatility is there. The concern is there. We violated through the 8 moving average last week. We gapped down and put us into a neutral bias below the 21 moving average. We stayed there for 2 days, 2 more days. And then today we're back up above that, but we're bumping our head on this black line. There's a red line there too. But we're bumping our head on this 4181 level, which is a key Fibonacci level. You know, they talked about it on CNBC saying that 4175-ish level, there's resistance there. And we don't know why and why the hesitations when we had this last blue box. The dreaded box of neutrality, I call it. But we're back there again now. So will some of the Jackson Hole stuff drive it? Possibly. In an ideal world for me, I'm looking for the push up. I want it back up above 4,200. I want it to pull back towards the 4181 and bounce. And that's my plan. I mean, I'm going long. The stocks that I'm looking at, I heard you guys talking Oxy and Berkshire, and I own them, right? I'm looking at this as a place to add to the portfolio on that bounce, because right now there's just enough uncertainty that I'm not ready to jump in today.
From a technical standpoint, you know, I know Fibonacci's are great for doing retracements and stuff. I mean, what do you say about that? You know, kind of, I mean, the way I see it is it's kind of counterintuitive, right? That like as a very novice beginner investor, I would see a stock at all-time highs and be scared of that. When really, I think the more I've learned, I actually see that as a good sign. I think it depends on your time frame, right? If you're looking for a swing trade right over a week, maybe buying something when it's overextended obviously isn't great. But if I'm buying something for long term, I don't mind buying into the strength.
I agree. You know, we're taught buy low and sell high. I'm a firm believer of buy high and sell higher, right? And just continue to trade that, but not buying the breakouts. You know it from our conversation, Sound. I'm not a breakout trader. I need a retest. If you're a breakout trader, that's great. You just have a system that you have to create that allows you to trade it effectively and not get your head handed to you. For me, if I can get the breakout, the retest, and the bounce, I'm so much more about it than trying to take the breakout. And it's a planned setup. As long as I can see it setting up the way I need it to be, I'm in. If not, I'm sitting back, putting my hands behind my head and doing absolutely nothing and just waiting for the setup to apply.
Wait, so sorry, I lost that last part there. I was getting distracted by the chat.
That's okay. I'm waiting for the right
I gotta be completely honest with you there.
I understand. It's multitasking. I do it all the time with this type of stuff. No problem. It's just waiting for the right setup. That's all it is. I'm waiting for the right setup at the right timing. We're not there today. Once we see the right setup, then we're ready to jump.
Got it. So wait, what's going on with NVIDIA? I'm looking at the chart right now, and it's kind of is it not trading right now?
Oh, I don't know, because we did have a really nice bounce on it today, even though the numbers didn't look good earlier on.
Wait, no, I don't know. But I think I was looking at it on my Robinhood, and it might just be wonky on my Robinhood.
Let's see. Let me go over to TradeStation. We're trading.
It's trading with the chart.
Frame.
For some reason, my chart here. I'll show you what I'm looking at on my screen. For some reason, I guess maybe this is my sign that I should get a new broker. Look at the chart here, Rob.
Yeah, Houston, we have a problem.
Yeah, it's gonna be hard for me to trade off technicals with charts like that.
Very, very much so. Very much so. This is the one we got smacked on today. We did a bear call spread on the announcement. We got the gap down, and we just took off. So we took our losses quick on it. It wasn't big. CRM and Snow made up for it, but this was one of the three. This is the first day in at least 2 weeks that we've had. We pick 3 news trades every morning that we send out, and this is the first one in at least 2 weeks that did not produce. That we had to give back on it.
Okay, Pickle Jim in the chat saying Robinhood charts are broken on GME, AMD, AMC, and NVIDIA. Interesting.
Go figure.
Go figure. Yeah, all those names. I'm sure those aren't popular on the app.
No reason we need to check those.
All right. Let's see if the chat has any tickers they want to check out while we've got you on, Rob. Otherwise, I'd love to just keep hearing what setups you've been watching, what you've been trading, or anything you're anticipating trading here in the next. We should talk Tesla because Tesla did the split. I know from a chart perspective that doesn't really change much, but now I'm curious. On the options market, is Tesla going to get back interesting again for a lot of people?
So I need another day to get a true read on fibs, at least on my Omega charts. We don't update until the end of the day, and then you can see the gap down. That's what it's showing it as, an actual gap, right? After today, we get our close. We'll get it. Historically, it'll take all the pricing and drop it back as if we never split, and we've been at that price across the board. But if you look at Amazon from their split, hopefully that wasn't really Amazon that I brought up there. There we go. If we look at Amazon and we just go back a little bit, right? You can see the S down here is where it's split. We kind of moved up a little bit on the announcement and we pulled back and went for about a week and a half or so before we got the climb, right? If you look at Google, right? We actually pushed up for a day or two before the pullback. So the strategy is normally when you get the announcement, after the announcement happens, the expression is buy on rumor, sell on fact, news. The fact happened. We got the split. So I'm anticipating some pullback in Tesla after the announcement. I'll be looking at the key fib levels for the bounce points, and those will be the entry points for me. I normally look at a stock split company like a Tesla or a Google or an Amazon as a 5 entry point. So if I'm looking to buy 100 shares, I would add 20, 20, 20, 20, 20, 5 different times. I'll take my initial trade. If I get a pullback, awesome. I'm looking for the pullback and the bounce, and I'll at that bounce, that area of strength, I'll take another 20 shares. If it pulls back more, bounces another 20 shares. If it moves up, I'm not taking it on the move up. I'm waiting for a retest somewhere and a bounce, and I'll take another 20 shares. I'm always looking for the key level of strength instead of just, well, this seems like a good place. Why not? Right. And don't get me wrong. You could get lucky. You could be spot on with it. For my strategy, it only works for me by finding those key levels. And it's always retests that we're looking for.
Yeah. And I think right now, with something like Tesla, a lot of people are just, Tesla's going to be so dependent on the future Fed rates. And so people are really, to me, at least from a retail perspective, I know a lot of people aren't bought into that this market's going to be one of those markets that you can just buy Tesla calls or buy calls on the Qs and make a lot of money. But if we get some more conviction or we get some confidence that the Fed is going to, stop raising rates at some point soon or whatever, then maybe these get really interesting again.
Correct. And I think some of what's coming out of this Build Back Better bill, we've got to really get some people to dig deep into there. So there's conversation that I've read. I don't know if it's accurate or not. So just put that disclaimer right there, that there's going to actually be penalties if you don't have an electric vehicle with these new IRS agents coming on. That's one of the things they're going to be looking for. right, wrong, or indifferent, I don't know. I don't have an electric vehicle. I don't have any intention of buying one anytime soon. And because I know I'll forget to charge the darn thing and drive 20 yards and it'll fail. But some of those types of things will help and or hurt depending on what's coming through this with the energy portion of that bill.
Yeah, and I think it'll be a long time to see from Tesla and from these other perspectives, like exactly what that bill and other bills, as we're talking about in the chat, the government injecting money or subsidizing clean energy. Like we know it's going to be bullish for these companies, but we don't know exactly what it's going to mean for each individual company. So it'll be interesting to see for sure.
Correct, and we don't know the when. That's just it. When does it really play out for that particular company and or that particular sector? When is it solar panels versus batteries for vehicles, car manufacturers, and so forth? Where does it all play out? I mean, you hear the GMs and the Fords pushing more into the EV, but where is the break point for them that they could say, all right, it makes sense to produce less gas, vehicles versus the battery operated, the EVs?
Yeah, I mean, I don't know. I just don't know how right now, right? I wouldn't want to invest in like an oil and gas company that doesn't have its sights fixed on some sort of way to make money on clean energy in the future. It seems like that's a way to just kind of write your own, death sentence.
I agree. I mean, and it's in this industry, in all industries, right? When I was back in manufacturing 100 years ago, I went to a manufacturing facility called Nucor. Some of you have heard of them before, right? Talk about innovative, where they take scrap steel and remelt the scrap steel to make steel out of it again, instead of having to dig up in the earth and do it with brand new ore. It's an amazing facility that's there. So same thing. It's that innovation that's out there that companies are coming up with. It's no different here. We're dealing with cars and batteries. What are they going to come up with? Yes, you're going to see some money get dumped in there. And the more subsidies the government gives to these companies, the bigger and better those things are going to be. We just have to keep in mind that this cut our legs out and we're going to stop gas today and start electric vehicles. It can't happen. We need a plan, a serious plan, a good plan to make it work properly. I'm looking forward to it, to the emission control, but I just don't see us there yet.
Yeah, and I mean, I don't know. I mean, for me, it's just one of those things that it's like I think, and what kind of, I guess, the argument in the chat's been about has just been, it's like even over the past 10 years, like even the private sector has been slowing down its investments into fossil fuels and into clean energy, because that's what they see as the more appropriate allocation of capital, both in terms of what they see is going to be profitable down the road and sustainable. And I mean, I don't know, Rob, I just want to be able to know that I can take my kids, fishing and hiking and camping in 2040 or 2050 or whenever that is.
I agree. I mean, we definitely need to change. There's no question. We need to change. I just wish we could get the political element out of it and not have clean energy suffer because somewhere else in part of another bill we need to add something else, or we're not going to get the clean energy bill the way it should be. Just take a bill on its merits and go at that.
I think, and this is me being, kind of glass half full, kind of optimist. I do think, younger people, I think my I've seen a lot of groups, or, they're like millennial, conservatives for climate change. I think it is a little bit less politicized in like the 25 and under crowd, because I think if you're in an under 25 and crowd and you want to be taken seriously among your peers and you start saying this isn't real or isn't a real problem, boom, already 80% of us, doesn't matter if you're conservative or progressive, you're going to say, okay, you lost all your footing, you don't know what you're talking about if you're just going to completely dismiss facts.
Yeah, absolutely. I know. I mean, my girl's 25 and 28. Wow. Anyway, both of them carry glass straws with them when they go out to eat because they won't use the plastic straws in the restaurant.
Yeah, and I mean, I love that. I think little things like that. Like I remember being taught as a kid to turn the water off while you're brushing your teeth and turn the lights off and all that. And like all that stuff's great, but at the end of the day, it's what these corporations are doing and what they're pumping
Right.
out there. So we're gonna need kind of change from the top down there. But it seems like, and from where I'm focused on from the investment market perspective, it's like that's basically where I'm. There have been different big developments and technologies in the past that have been aided by government policies, by subsidies. I mean, even if you look at our development of technology and computers over the last 30 years, look at how much of these companies, were subsidized in California and Silicon Valley and all this. And it's like, that's not a red flag to me that some people are out there saying, oh, investors are just putting money in this because they know the government is also going to. It's like, if you have both the private and public sector pumping money into this thing, it's probably gonna make money over time, right? Like that's why I'm willing to invest in clean energy at this point.
Right, and as long as it's an investment, and Warren Buffett, if you want to buy a stock and invest for a day, you better be willing to hold on for 10 years, right? You have to be willing to hold on to that position, and as long as you are, that's great. If you're looking at it as a trade, then you want to look elsewhere. It doesn't matter what the company does. There are so many companies out that I trade. I have absolutely no idea who they are or what they do. I don't care. What do? They make me money. I really don't care. Do I know all the details of Snowflake or everything that CRM does? No, I know the basic of what they do, but I don't care. If I'm in the trade today and out of the trade today, I don't care. If I'm buying the stock, I darn well know what Amazon does. I know what Berkshire does. I do own the B shares. I heard you guys talking about that right before I came on. Qs, Spiders, Apple, and so forth. Oxy, I know what they do, but they're long term for me. If I'm trading it, as long as they move in my direction from a technical pattern and everything fits, that's all I care about.
Yeah. So with that said, I mean, you've got your list, right, of how many stocks that you're kind of looking at trading every day.
So my standard list is 20 stocks that we trade off of every single day. From there, I look at pattern structure, which are all Fibonacci setups. We have 6 different Fib setups that we trade. One of them right now, which is knocking it out of the park, is that switchback trade we taught here first a couple of weeks ago. That one strategy is working extremely well. We're seeing a lot of good results from our students with that setup.
Okay. Yeah, and I mean, I like that setup, Rob, because I think if you are looking at the same 20 stocks over time, you're gonna be familiar with their behavior, understand it a little better than if you're just pulling up all 500 stocks in the S&P 500 and trading a different one every single day.
Correct. For me, it doesn't work unless there's a reason behind it. News, absolutely. But I'm a big fan of, and I'll share it, so you guys are welcome to copy it. It's not like I'm hiding it. It's not I can't tell you what it is. It's not like you're going to know who every one of these stocks are. If I can get my alphabet right, ABC. There they go. All right. Apple, Adobe, Booking, Chipotle, Costco, Google, Goldman, Home Depot, MasterCard, Meta, Netflix, NVIDIA, PayPal, Roku, SPY, Square, Tesla, United Healthcare, and WD. That's the 20. We trade them regularly. This year, we've put on about 300 trades amongst those 20 stocks. And we've had a few others on that we've had on and taken off. But of a core 20 group, as we have right here, there's a little over 300 trades taken so far this year.
Got it. I just asked the chat, is there any tickers that we would like to check out while we do have Rob here? Yeah, man. I mean, I haven't really been checking anything out. I would say try to stick to some bigger names. I don't really know what CSTM is. 3M is a bigger name. I haven't looked at this chart in a while. Last time I looked at 3, yep, it's about right where it was last time I looked at it.
Yeah, so Fib is getting a little bit older. It comes back into January of this year, but it is still a valid Fib. We had a really nice move to the upside and a drop. We're in a bearish bias right now. So if I bring it in to zoom in on it, it's tough to try to take an entry. If I try to take the downside, 140 is my downside target, right? That's our first Fib line. On the upside, we're looking at 143.5, which is our resistance of both the 8 and the 21. Problem we run into there is because we're in a bearish bias, I'd be very cautious unless we had a really strong bullish day to take a bullish trade, and or you're just taking it as a day trade. No matter what, you're only taking this intraday. You're going to be in and out. Until we can close above these 8 and 21 moving averages, I would not consider anything bullish long on this position yet.
Got it. Yeah, and I mean, I know 3M from a news fund. I haven't looked at it from a chart standpoint, but I know there was this big lawsuit with their hearing or their earplugs and some other things. But I mean, I don't know. I mean, it's like 3M's a huge company. In my opinion, will be around a while. I don't know. It's got a decent dividend. This is one to me that like I wouldn't buy right now because it's not that interesting to me long term, and the chart looks terrible. But when the chart does start turning around and looking better, maybe it is interesting to hold for a little bit.
Right. So a couple different things you could do, right? If we look at 3M here, right? Just to come on. Go. And let me pull an option chain up for it. Right. So if you look at 3M, instead of buying the stock, let's go look at buying an option that's at least 120 days away. Let's go look for a delta of 65 to 85. And we have a minimum of 100 open interest. So right here, I've got 1220 by 1340, a little bit high on the cost there as far as the bid-ask spread. Let's see. Theoretical value is 1305. We're going to pay 1280 for it at the mid price. So if I go ahead and I set this up as a buy, okay, and we leave that in there this way, I could then go ahead and now there's only 1 day left this week. So let's just look at next week. If I go to next week and I go and look at a call with a 40 delta, I could sell the 143 against it and take in $1.54. Right. So if I load both of those trades up, we just convert this to.
So Rob, Easy Mike's asking a question in the chat that I was also wondering. Why do you go that delta range specifically, 65 to 85 or whatever you said?
So and I don't draw well with mouse, or else I would try to do it. But if you look at a bell curve, okay, the sweet spot on a bell curve is when you come from the flat and you get into the curve right here. That 65 to 85 starts in that range, right? Not just as it curves, but just up a little bit. It gives you the greatest bang for your buck on the options. So that 65 to 85 delta, when we first came up with that, because I was originally taught 70 to 90 was the delta I was taught. When I first did the testing on that, we went back and we probably tested, it was a couple million days of trading, looking at the options data and looking at what the movements were. And we got the best move for that price. When you're buying, where most people tend to go is a 50 delta. Well, what happens? 50 delta, two problems with it. Number one, it is the most expensive time value of every option out there. And number two, most of the time it is only time value. It's rare that the at the money has any intrinsic, right? Just based on strike and the strike price and the stock price, you could slightly have intrinsic value. But if you are wrong in a 65 to 85 delta, I have the best chance of still making money on that trade. Whereas if I'm wrong on a 50 delta, every bit of it goes against me.
Got it. Yeah, that makes sense.
The other part of it, Aaron, is delta is a probability calculator. So if I look at this delta here and I'm trying to find a 65 to 85 delta. So here's 69. And we're talking a 138 strike. So what that tells me is come September 2nd, which is the expiration of the one I chose, come September 2nd, there is a 69% chance that this option will have intrinsic value on expiration date. When I go down and I pick an 11 delta, I've got an 11% chance of it having cash value. Now, that doesn't mean good versus bad, but most traders don't manage options positions properly and they get their heads handed to them. So can you still trade 11 delta and make money? Yes, it's just strategy is all it comes down to. For me, directional trades, 65 to 85 work best.
Yeah, I mean, I'll have to start looking at those deltas more because I assume when I look at a lot of the or when I'm trading a lot of options, I'd benefit by looking at some of these.
Absolutely. So for the 3M, right, you could get into this trade for $11.26. And worst thing that can happen is someone would take it away from you at 143 and you could take it away from somebody else at 145. But every week we're going to rent this thing out for another $1.50. Instead of putting all the money in the stock, buy the long option. It's called the diagonal spread. Buy the long option, sell the front week against it, and you do it week after week after week after week.
Interesting.
Pays for itself very quickly.
Yeah, and I remember we talked about this a long time ago, Rob, where you gave an example where, if I had, 15 grand to get a new car, instead of putting that 15 grand right into the car, right, I could take that 15 grand, do these, high probability option sales, make 300 bucks a month, and then pay a 300 buck a month car payment instead of paying that car. Is that kind of how you explained it?
It's exactly what it was. You were spot on. I remember the conversation you and I had about this. You're spot on, because what basically it does is you're not killing the goose that laid the golden egg. You're not giving up the goose by saying, here's my 15 grand car maker, you can have it. You're saying, I'll hold on to the 15 grand as long as I can generate enough from my cash to pay the car payment. Who cares that there's interest on it? You never had to give that cash up. You have that cash as an asset to keep working with. The car is paid off. You still have the 15 grand. You keep doing it again and again.
But I mean, okay, so assuming you're doing this with a little bit of cushion, right? A little bit of leeway. What's the right? If you're doing these high, like, what's the is there what's in what scenario essentially does this go completely against you and you lose more than what's intended?
So right now on a diagonal spread, if you have to understand where your break-even point is, keep in mind we're going to spend 11 and a quarter, but we've got a difference of our strike prices of $8. So if someone took that away from me right now, I would make $8 on the stock transaction. But I laid out 11.26, so I'm underwater a little over $3. So basically, Aaron, I have to do this 2 more weeks where someone doesn't take it away from me, assuming the same strike prices. Right? If I do it for 2 more weeks in a row and then I'm exercised, I'll be at a break even. I made a little bit, and then anything after that is gravy. So if it goes up a lot and into the strike you sold, you could be exercised. So that's one of the downsides to this trade. And that's, again, assuming I don't change strikes. If the stock moved up a little bit, I may not sell next week the 143. I may sell the 145. And now I made that $8 spread of the two options a $10 spread. So I can make a little more. And of course, you've got downside risk.
Yeah, I mean, in any trade, in any investment strategy, you're going to have downside risk. I like that idea, though, of finding a way to, get like a sustained way to make a little bit of money, and then you can use that, in that car example, as a way to really, like you said, you don't have to turn that 15 grand over all to the car maker or the dealership, right? You can take control of your finances sometimes.
Correct. And that's a huge part of it, is learning the mechanics behind money. I mean, it really, bottom line, is what it is. It's what can I do to generate the most cash flow with the least amount of risk that I take on. And that's what all of our option strategies are about. Everything we do are about that strategy, about that component of a strategy.
Yep. All right, let's see. I saw some other tickers thrown out in the chat. I know you mentioned snow earlier. Was this one you were trading into earnings? Are you still trading it?
So it was one that went on today, and I'm in the office, so I don't have my account here.
But, you're good.
OW, right? So let me go and grab the end of day chart first. So we had this gap up, right? Well, we're looking immediately. What do we look for? This was a news-driven strategy off of earnings, I believe it was, right? Was it earnings or revenues they talked this morning? I forget. So immediately we see the gap up. It was like $30, I think, in pre-market when we did the recording. And we're watching and we're looking somewhere down below this fib line is going to be our credit spread that we're looking for. And that's exactly what we're looking at, is a bull put credit spread. So there's 3 words, 3 bull put spread. Bullish trade, using puts, spreading out our risk with options. That's the way to remember what that strategy represents, right? So we gapped up to 191. We were down here below 186, right? So maybe about the 185 we're looking at. And then we're going to sell that strike price. We're going to buy the strike below it. And we got, I think, 40 or 50 cents, 30 cents. It was between 30 and 50 cents we picked up on that one this morning. And right now it's pretty much worthless. There's nothing left. It's for this Friday, mañana, tomorrow, expiration is when we did this for.
Wow. Let's see. Other tickers in the chat. Anything else we've got? Someone asked about Twilio. Or actually, let's do Crocs instead of Twilio.
All right. So haven't looked at this one in a little bit. Let's take a look further back in time. All right. Okay. So we are right now in a true bullish bias. What that means, folks, is the 8 moving average, the pink line is on top. The green moving average, the 21, is underneath it. And the brown moving average, the 55, is down below that. So all 3 moving averages are in the right order, and we are above the highest moving average, which is the 8. We also have a confluence at this fib level right here. We gapped up slightly today and ran. This was a great setup because we had that confluence of the fib line and the moving average right on top of each other and a good bounce. If you're not in this trade, you've got to be cautious because we've pushed up to this level before within the last week or two and failed from it. So if we can, break out, it's awesome. If you are in the trade, you might want to tighten your stop a little bit at this point. But I'd be targeting this 89.5 as the next upside target.
Yeah. We talked about Crocs earlier in the week. We actually had Benzinga CEO Jason Raznick who said he's been in this stock over the past couple months. I've been looking at this chart for a couple weeks now, and like when you look at the monthly candles or whatever, it's just so interesting. It went straight up then straight down, and is now coming back a little bit. So certainly kind of more one of those more value, cheaper names to look at here as we're coming back up. But I'm hands off on this one right now.
Yep. I mean, again, the place it's at right now, we've been higher, right? So it's not as if we don't have room to run. But I think some of this, we'll call misvaluation from COVID has to be factored in. But from a technical standpoint, it is bullish, but we've had a huge run. So you just have to ask yourself one question. What compelling reason is there for me to buy this stock today? I don't have one.
Yeah, no, I don't have one right now either. Did we ever do? I don't know if we ever got your technical breakdown of Oxy right now. I know you said you were in it and you were in our Berkby, but right now, and again, I'm not when I was pitching this stock or saying I was bullshit. I wasn't necessarily saying today, right now, is the best time to buy it. I'm fully transparent about my timeline. I'm buying this to hold it for a while.
Mm-hmm. Yeah. So. Listen, when Buffett comes out and says he bought a huge percentage of it, there's a old commercial when I was a kid. When E.F. Hutton talks, people listen, right? When Buffett talks, people need to listen. He's not a dumb guy. He's made billions for himself, learning how to invest in the market. Very core fundamentally investment strategy, right, is what he uses. So for me today, would I add to the position? So here's what I would look at. If you're in Oxy right now and you say, I've got more cash and I want to put more money in it, should I just buy this now? Well, we've had this breakout before and a failure. This time we got the breakout. It pushed up a little bit yesterday and down a little bit today. For me, if I was looking to buy more of this, I'd look for the pullback to the 71.5 level. The 8 will be closer to it. Close near it and a bounce, and now at least I am entering at a key level. If I'm wrong and it goes against me, I could get out of that portion of the trade if I want with a very small risk in that trade. But taking the breakouts, for me, breakouts do not work for me. I just cannot get my head around it because I get swooped up in the emotion that so many other people are chasing after as well.
Yeah, and I think that's what's so hard for so many beginner traders is dealing with that emotion and not getting swept in it, right? We talk about, the fear and greed index and which one's driving the market right now. And honestly, I actually did check that out this week at some point. It's pretty flat right now. I think a lot of people are just very neutral, not really sure which way to go. And it's interesting. It's an interesting macro environment where you have some people out here seemingly convinced we're gonna come back and retest those lows. Other people more bullish, saying, "Hey, we've seen the lows. Now it's time to buy and to take some risk off."
Yeah, I agree. I mean, they've had a tremendous move from about that $25, from this year on, just astronomical 3 times, right? 25 up to 75. So it's a great move. If you participated in that, awesome. But even that, so much of that was chop. If you were trying to trade into this, you were getting your head handed to you most days, right? If you're investing and you're just setting back and saying, all right, I've got my setup in place. I bought the stock. My risk is a little bit greater because I'm long term. My risk in a day trade might be $1, $2, $3. Maybe on a swing trade where I'm holding as an investment, maybe I'm going to give myself $5 or $8, $10, depending on the price of the stock, to go against me because I'm holding it long term. I'm trying to not get caught in all of this small whip that's taking place in there. And that's where a broker will tell an investor, don't trade the money, put it in there and just let it sit. Buy and hold, buy and hold, buy and hold. Goods and bads to it. But if you're doing it as an investor, you cannot be so quick to jump in and out.
Yeah, I I couldn't agree more there. I do see Easy Mike in the chat. I know we've had you for here a few extra minutes, Rob. So if you got to run, you got to run. But I was going to do one more stock because this is one I've been looking at. Baba. I said yesterday that this actually gets interesting down here, and it's one of those things where we've been talking about Warren Buffett, right? He says buy when others are fearful. We've been hearing all these bad news and headlines about China, this and that, and the most recent one has been about this bad heat wave. And really, it's like the more you get bad news, it seems like the stock is going up. So, I don't know exactly what the headline is today, but the stock's up about 8% today, having a nice day. When does this get interesting from a technical standpoint?
So we are still, the moving averages are completely flipped around from the way I said it before. Pink on the bottom, green in the middle, brown on top. The stock is above all of them. So the bias is considered bullish, but I would look at this and say, yeah, whoa, wow, I am not real interested in this outside of just being in a day trade. I'm fine with a day trade on it, but not in today. I opened in the middle of nowhere, right? I had some resistance above, had not too much before this fib line and the 100-point level. But if you can get a close above that 100 level, right, a retest and a bounce, you've got room up to about that 108, 109 level right there is our next resistance. So that's what I see on Baba, but you are right that it seems like we get these cycles where every couple of days, good, bad, good, bad. NASDAQ is easing off on, banning China stocks. Oh, China is coming out against them now. Oh, China's now eased up on COVID regulations, so it's good for these stocks. And we see the ping pong back and forth with it, and it's a tough place to be. Baba, Baidu, all of them.
100%. Definitely more risk involved in those Chinese names. I just remember seeing when Baba got down there, I was certainly interested in it. Rob, well, thanks again for hopping on with us. I'm going to drop that link in the chat again, tradinglikeaboss.com. Click that link to learn more from Rob. Rob, man, any wise words you want to leave us with as you part?
Yeah, just focus on the setups, folks. I can't say it any more importantly than that is if you just find the right setup, you've got the best opportunity. Don't be so quick to jump in a trade. If you only find one or none today, that's okay. Follow the right setups.
Yep. You heard it, Rob. You heard it from Rob. Follow the setups. Don't just trade on emotions. Look at the charts. Follow your setups. Tradinglikeaboss.com. Rob, thanks again for hopping on with us. Always a pleasure to get you on, man.
All right. Thanks. Take care, Aaron.
You too. All right, guys. Mr. Rob Roy, tradinglikeaboss.com. One of my favorite guests we get on the show. Really, not just a good trader, but a good dude, which probably, at least to me, is more important than being a good trader. Dylan Carson in the chat saying sometimes the best trade is no trade. It's very philosophical of you, Dylan. I agree. QQQ, I was wrong. Quantum is saying, what were you wrong about? Direction? What are we talking about? Baba up over 8% on the day.
Let's go.
Let's go. You guys heard who that is. Mr. Luke Jacoby. How we doing, Luke?
Good, man. I got a funny trade.
Funny trade.
Yeah. All right, so last week, when we were on last week, you recall we made a bet on Bed Bath & Beyond?
I recall we did. I don't recall the exact specifics of it.
Okay. I think that I had the side of, it was 4-1 lunch. I remember that. And I think that I had the side of Bed Bath & Beyond going higher. And you had the side of it going lower. But the trade developed, or the story developed into an actual trade that I made.
Okay.
So on Monday, I did place an out of the money call YOLO Bed Bath & Beyond trade. I bought the $11 strike calls at an average price of 80 cents. Felt very good yesterday. Intended to close the trade yesterday. Told followers and all that I was closing the Bed Bath & Beyond trade yesterday. And before I know it, it's 7 o'clock. Totally forgot to end up closing that trade.
So
it's not good. It's not good.
How did it end up?
Not good.
Okay.
Okay, so
Well, how about this?
at yesterday, I was up 300% on the trade.
Great.
Not bad for a day.
Great.
Right? Take it. And basically, here was the thesis, right? It was that dead cats do bounce. I saw the social interest on this one starting to increase again. The stock price had not increased with the social interest increasing. The calls were cheap. And I said, you know what? Let's have a little bit of fun. This is not like a financial advice, portfolio building trade, which again, we can get into the fundamentals and actual portfolio construction here. This was me having fun with it. And so went from being up about 300% to now down 67% from simply not closing that trade out. So here's a question that I have for you.
Closing the trade's more important than opening it.
What? 100%. I had all the intention, man.
Sorry, what was your question?
Told
I didn't mean to
everybody.
cut you off.
The question is, how do I manage it at this point? The calls expire tomorrow.
I mean,
They're so cheap. It's not like I get a ton of cash.
Exactly. I was gonna say, if it's someone else, I might say sell it and take the money, your equity that you have in it right now. But
it ain't much, man.
For you, it's like, what difference is that gonna make? I think just hold on to it, and if you get lucky and something crazy happens this afternoon or tomorrow, you'll make some money. If not, hey, you learned your lesson.
Yeah, I mean, it's gonna be a summer Friday, week before Labor Day. You're gonna have lighter trading volume tomorrow. That's a decent setup for a short squeeze or a run.
All right, so and we can come back to Bed Bath & Beyond real quick, but on that note of dead cats bouncing, I'm going to pull up a chart here that's down 18% today. Daily candles here on Peloton. $11 now, Luke. Let's go to the overview here on Benzinga Pro. Pro.benzinga.com to sign up for a free 2-week trial, no credit card needed. Peloton now trading at a $4.5 billion company. Of course, announced a deal with Amazon. Maybe showing.
No. I'm calling bullshit on that one.
What do you mean?
Did they actually announce a deal with Amazon?
They announced they worked a deal out to sell their products on Amazon. I'm not. It's the way.
But can't I go create an Amazon store for Benzinga right now?
I think
and sell something
for companies like Nike, for example, does not sell on Amazon. I think basically
it's not a partner. Here's my point. I don't think that this is like a partnership with Amazon.
It's just that Peloton decided to start selling their shit on Amazon.
That's what I'm saying.
Okay.
I don't sell anything. Benzinga doesn't sell anything on Amazon. We could.
My point in bringing that up wasn't that, and again, like the stock got a nice little bounce off of it that really it shouldn't have probably yesterday. And someone brought that up on CNBC saying, hey, this isn't really a good sign for Peloton. Brands that have the power like Nike don't want to sell on Amazon.
And again, it's not like they have some special relationship with Amazon.
No, they have no leverage in this. But my point was maybe that's a sign that the company's finally going to get to a point where it's like, all right, let's just cut our losses. What do we have to do? We have to sell our shit on Amazon. We have to sell this part of the business. Like, maybe they're getting to a point where they're finally rolling over, and maybe as an investor, that gets interesting because it could be a buyout or something else.
Yes, I don't disagree. I did think that the stock was going to pop on earnings.
Well, it's down 18%.
It didn't. But here's why. Obviously, that I don't have a trade either way in the stock because nothing's high conviction. I still don't think that was necessarily the wrong way to think about it. Again, basically where I was getting at is that the company had gotten a lot of the bad news out ahead of time. It has the new turnaround CEO. We've already heard about the inventory changes, the team changes, the pricing changes, etc. They wanted to get all the bad news out of the way so that way they could post something very positive in their earnings report. Obviously, that wasn't the case, but that's why I was thinking about it in that way.
Got it.
You said it's at a $4 billion market cap at this point.
4.5, yep, I believe.
So revenue next quarter, they guided at $625 million. What is that for a year? Oh man, so that's only $2.5 billion a year. At its peak, it did 4.4 billion in a single quarter. Yeah.
I mean, that's what's so tough about like these. Like, what are you supposed to do if you're?
Oh shoot.
Huh.
And I'm sorry, no, that's wrong. I said that wrong. At its peak, it was 1.1 billion-ish in a quarter. Okay, so it's down about half. But this is their holiday season quarter as well. The 625 is not great. So let's call it 2 billion a year they're going to do. So it's trading at 2 times sales. I want to look and see if there's any debt on the books. Long-term debt.
Yeah, I mean, I don't know. Peloton's not interesting to me. I just don't get like what are you supposed to do if you're the CEO or if you're a company that got a lot of this, got a huge tailwind during COVID. Like you can't help that. You had a great quarter and you're never going to touch that again, or at least for a long time, you're never going to touch. Like, what else can you do besides in the moment saying, hey, we're having a great quarter, but this isn't going to be our typical quarter?
Yeah, and Jay Rice, there's no PE because it has negative earnings. And what up, Shelly? It's tough. I mean, here you heard the case that I made a million times when the stock was way inflated. Every fitness fad is exactly that, a fad. Right? Since the advent of gyms, what publicly traded company has had staying power?
In the fitness space.
In the fitness space. The supplement companies have come and gone.
Yeah.
The yoga companies, that was hot for a minute, come and gone.
Lulu's done well. Nike.
The cycling companies, come and gone. I'm not calling Lulu a fitness play.
Okay. Yeah, no, there's no...
I've probably spent $1,000 at Lulu in my lifetime, and I've actually literally never worn any of those close to the gym.
Remember like Bowflex? Like that was big for a while.
Yeah, come and gone. Like the ones that I remember, I really lived through, were I saw the supplements come and go, the yoga come and go, and then the cycling come and go.
The even like Lifetime Fitness used to be a public stock, is not anymore. I think Gold's Gym hasn't done even the gym stocks, which the gyms obviously aren't fads.
No, I think the gyms are okay.
The gym stocks have done. Let's
I think
pull
they're
up.
fine. Pull up Planet Fitness.
PLNT. Or?
Yeah, PLNT. I think the gym stocks are great. That's what I said. Since the advent of gyms becoming popular, which happened in, let's call it the 80s, right? I grew up with gyms already being popular. See, look at that. Planet Fitness, PLNT. There you go.
Planet Fitness done well, yeah. But since 2020, I mean, look, it was trading $85 pre-COVID. It still hasn't gotten. I mean, it got back up there, but it's now trading below it. To me, there are more interesting opportunities out there. I could definitely be talked into, if you had a great bullish thesis on Planet Fitness. I actually think it seems like to me, like, I wish Lifetime was a stock, because it seems like for whatever reason, the more like luxury, there's probably a market for both, right? The nicer gyms than your Planet Fitness that people can go to for $19.99 a month or whatever it is.
How's your position in Ape holding up?
Let's pull it up.
Wait, did you actually trade that stock?
Are you talking about Ape Coin or the stock?
The stock.
No, I did not trade this.
I'm not. Never mind. I'm not gonna say what I wanted to say.
I don't even know, like, what. I still don't understand it. So
you're saying, like, what would you? You're asking the question, like, what would you do if you were taking over Piton? I think that the answer is probably commercial partnerships, hotels, gyms, etc.
Yeah, I think that gets interesting. But I mean, for like, think about a hotel, like gym, like what, like the most, like each Marriott's gonna buy one or two Peloton bike. I don't know. Probably.
Yeah, NLS. Jay Rice is another one. It's Nautilus.
Nautilus actually is very, very interesting.
Why?
I think from just like it's so cheap right now. What's the ticker? NLS?
Yeah.
So I was looking at this stock so to me, like, I don't know the actual fundamentals to look into it, but it has brand recognition. Like, you go into a lot of people's that have fitness equipment in their homes, a lot of it is Nautilus, and it's okay, so it's only a $73 million company right now. See, that seems very cheap for like a national brand that a lot of people know.
Let's look at the numbers. So what do you think the revenue is going to be this year? They guided a couple weeks ago.
So okay, it's a $73 million company. I think the revenue this year is going to be $20 million.
380.
380 million, and then the company. Okay, so how much are they spending?
That's what I'm looking at now.
All
right, so in the most recent quarter,
Okay.
they sold equipment for 55 million. It cost them 48 million to make that equipment.
Okay, so they made $7 million.
Before they paid
9
anybody.
million. Okay.
That's the hard costs. Like, that's the cost of the factory.
Okay.
That doesn't even include the labor.
Okay.
We might include the factory labor.
They fire everyone.
We gotta read the definition.
Automate.
So how much? So basically, sold $55 million worth of equipment, $48 million that it cost to make that equipment. That leaves them with $7 million this most recent quarter. How much do you think that they had to spend on people, like team members and staff?
In the whole
Let's
year?
just say running the business.
In the
So
whole
it'll
year?
be their marketing team, their executive team, all their contractors, their graphic designers, their website people. How much do you think that costs?
Their
Most recent quarter.
accountants, their
Most recent
auditors.
quarter. Yeah, accountants, auditors.
$5 million.
No. That was 37 million.
Holy shit.
So you went from +7 and now you're at -30. How much did they spend on advertising last quarter?
10 million.
13 million. That's a
Okay.
good guess.
Thank you.
Okay, so that's where you eat into that 7 million pretty effing quick.
Okay.
If it was a sole proprietorship and you're the only guy who works there, and
Yeah, that's
you
what I'm
pull out
saying.
7 million a quarter,
Fire
that's not
everyone.
bad.
Automate the factories. Fire everyone.
Yeah. Here, you want to go on their website and pull up the product mix really quick?
Do TikToks for marketing. Nautilus equipment. I
I
don't know.
love Pedro. I feel like selling fattening stuff is a better business in the U.S. than fitness. I still think the gyms are a sound.
Someone on Twitter, like wrote a whole thread about this stock and like why it was so interesting. So I'll have to locate that thread and find it.
Yeah, send it to me.
Okay. Because it is cheap. Whoever brought this up. All right. So they've got, what is a recumbent?
It's a bike, right?
I guess so. Uprights, treadmills, ellipticals. I don't know. I'm pretty sure and they own Schwinn and Bowflex. Schwinn is, that's like a big bike brand too.
Do they own Schwinn? That's interesting.
They might own Schwinn's like
exercise bikes,
stationary bikes, but not their like actual. Because if they owned the actual bike part of Schwinn, it would be a way bigger business, I'd assume.
I would expect so as well.
All right, let's go to their investors. Anyway, I'll find this thread, Luke, and I'll put a note in it to maybe we can talk about it again next week. Yeah, I don't know. You saw that, Shelly? I've seen that clip of that restaurant, Heart Attack Grill or whatever it's called. You can get like the cardiac burger there that comes with like 8 patties and is 8,000 calories or something.
Yep, I'm due for that.
How's can we give the audience a quick update on your shoulder? Have you started physical therapy yet?
No, I have not. So the update, you can sort of tell, you can sort of not. Here, let's close the screen down. I got sucked into shopping on Nautilus' website. All right, see my arms all bound up. I tore a pec in the gym. Part of the reason why I know this space decently well. Had surgery now 5 weeks ago from today, actually. We'll hopefully start physical therapy next week. I say hopefully. I'm scheduled to. I haven't reached out to anywhere yet. Supposed to start on Monday, so that's maybe not realistic.
We can get you figured out next couple days.
See. I'll work on that tomorrow.
All right, man. Oh, actually, let me ask you this. So I pitched a stock.
And Urban Farms makes a great point about Peloton too. Right? They had so much fandom, they should have been selling other products. They were like a little bit. I feel like they were too Apple with it. You know what I mean?
What do you mean? Like they should have been selling like Peloton water bottles to their customers?
Water bottles, meal plans, like turn it into like a true lifestyle brand almost.
Yeah. They were trying to be very Apple. I think they got
subscription play is great.
I think it was almost out of their control. They got like so popular among, this like certain crowd that it got like memed out of existence, right? They became like the kind of like Silicon Valley, like, oh, I'm going to have a Peloton. Like it became uncool to have a Peloton almost as quickly as it became cool to have a Peloton.
See, I haven't heard that. I didn't know that. I believe you. I didn't know that. What other subscription products do they sell? Like digital subscriptions, high margin.
Well, here, I was going to ask you
question.
this. So we've got only 2 minutes left. I was going to ask you, so I pitched a stock earlier. I don't know if you heard it. I'll give you a couple hints to see if you guess it. It's been a stock that's been in headlines over the past year. It's not like an under the radar, dark horse type stock. It's actually making new all-time highs right now. Any guesses so far?
No.
Okay, the majority of the headlines surrounding the stock have been because one famous investor has been buying a lot of it.
Oh. Cotton? No,
What?
the other half. Oxy?
I had no
That joke appealed to a small niche.
Yeah. That was a very nice joke. Yeah.
Somebody has someone pass it on their couch who just woke up.
Oxy. I bought some Oxy yesterday for the first time, so I didn't know this.
So OXY, what is it? It's an energy play, I know.
It's an energy play, so it's an oil and gas company. And the reason I'm buying it now, like 8 months late to the party, is because we was talking about how I did this. I judged a book by its cover, Luke. I saw an energy, oil and gas company. Warren Buffett's been buying it. Just assumed it was this boring company that had a good balance sheet and good cash flow, which is all true, but also that the company is making big investments into carbon capture technology. In a lot of ways, the leader in carbon capture technology, which not only will be great for Oxy's business, but also they're going to be able to license that technology out to other companies. They're going to be able to go to other energy companies and say, hey, we can help with your carbon capture, help you get some of these carbon tax credits, and it becomes a whole new revenue model. And Warren Buffett also owns about 20% of the company right now, Luke, filed papers to buy up to 50% of it. So all indications that Warren Buffett's going to more double his stake into this company. So I didn't know it had this whole growth aspect of future, clean energy, carbon capture. So I'm into it now.
All right, I'm not necessarily opposed. I think it's a decent thesis. Obviously, I need to dig into it. I saw you texted me about it yesterday. I haven't really dug in. But yeah, I mean, I think that it's interesting.
All right, and a lot of people out there are, don't love buying a stock at that's making new highs and it's already up 300% over the last year. I know, I get it, and it can pull back from here. Certainly, I'm almost expecting it to, but I'm buying it to hold for a long time. So I don't mind, withstanding a little pullback here.
Absolutely.
All righty, Luke. Always a pleasure to get you on, man.
Thanks for having me, man.
Of course. That'll be a wrap for today's Benzinga Live. We've got Stock Market Movers with Money Mitch coming up next, so do not go anywhere. This stream will automatically redirect you, and we'll be back tomorrow. Please remember to like the stream and subscribe to the channel. Till tomorrow, be like my shirt and stay green.